So the coronavirus is wreaking havoc in the market. Stocks are on track for their first month since the financial crisis. Goldman Sachs is warning of potentially no earnings for public companies in 2020. Interest and mortgage rates are headed down even lower, all low-time lows, and it could go lower, all resulting from a worldwide spread of the coronavirus. Insane, right? Now, why is that good for multifamily? Well, stay tuned to find out. What I'm more concerned about is a potential financial panic it can create. Here are a few reports that came out just over last week ago. Goldman Sachs, for example, warned that if it continues to spread, U.S. companies may post no earnings growth this year. And these are people who are companies who are highly dependent on Chinese supply chains, right? And we're all affected by that. In fact, they wrote a note that says U.S. companies will generate no earnings growth in 2020. We have updated our earnings model to incorporate the likelihood that the virus becomes widespread. Now, one's got to wonder, why is it that Goldman Sachs is predicting no earnings in 2020 when we're still so early in the year? Now, so according to Goldman, supply chain disruptions and decreased consumption will continue to hit earnings before most of the lost activities made up later in this year. In that scenario, history suggests that S&P earnings per share could slide a whopping 13%. This is according to this article. Roughly over 4 quarters before rebounding 10% in 2021. That's pretty bad. As a result of this, get this, Goldman is advising its clients to shift their holdings away from cyclical stocks with significant operations abroad to real estate. That's right, real estate. So that's just one story that grabbed our attention, but there's a whole bunch of other ones here. For example, Washington Post. The Centers for Disease Control and Prevention warned that the spread of the virus is inevitable with the United States. And of course, this news caused the yield on a 10-year Treasury to plummet to a record low Wednesday, falling to 1.3%. It was the second day in a row the yield sank to a new low. So check it out. Here's my market forecast for the remainder of 2020. Volatility. Get ready for a wild ride because the market does not like uncertainty, and we had nothing but uncertainty in the future. We got coronavirus. We don't know what's happening there. And we have an election later in the year. So it's going to gyrate all over the place. Now, this is all great news for us as multifamily investors, right? Because rates are going down, unimaginably going down, which is great for us as we're buying and locking in 10, 12-year debt as well. And it's also fantastic for a passive investing because per Goldman Sachs, real estate is kind of a safe haven to stock market uncertainty. Interest rate at historic lows we talked about, and the demand for affordable housing continues to increase every single year because you can't build any more affordable housing. So this is all great news for passively investing in multifamily syndications like we do. Now, if you want to find out more about the volatility of the stock market and how that compares to multifamily syndications, I have a fantastic free report for you. It's called What's the Best Investment, the Stock Market or Real Estate? And it's at themichaelblank.com/report. And you can read for yourself about the impact of volatility and fees and taxes, inflation of the stock market versus investing the same amount of money in multifamily syndications. If you're ready to invest with us, and you're tired of the stock market, or you want to diversify some of your portfolio into multifamily syndications, then why don't you join our investment club? So go to nighthawkequity.com/join and fill out a very short questionnaire. You can schedule a call with us, and then we'll explore if investing in multifamily syndications is right for you. And if so, we can present you with one of our upcoming opportunities. So hope that was helpful. All right, talk to you guys later. Hey, and before you go, make sure you subscribe to my YouTube channel because we're putting stuff out every single week. Also, check out this special report just for you. It's what's the best investment, the stock market or real estate? It's going to blow your mind. And here's another video for you to check out.